agree. I think that Japanese equities are my favorite developed market asset class right now. I think there continues to be a second leg up, even a third leg up for Japanese equities. We think that the Fed is going to have a higher for longer policy rate, whereas I take a non-consensus view that the BOJ is going to continue to have ultra loose monetary policy at least until next year. So that gives a good pathway for Japanese equities for the second half of this year. And then on the other risks premium side, I continue to like Chinese equities given these valuation levels and what the government is doing.
Tell me about the Asian region a bit more. What do you like around Asia?
Well, I think that we continue to see pockets of opportunity, especially in Southeast Asia. I like Thai stocks at these levels. There continues to be some political developments with who's going to be the prime minister, and I think that ball continues to be rolled forward. And then other parts we like Korea as well, given the semiconductor sector seems like it's bottoming out, and we're seeing perhaps an upcycle with that sector.
What kind of time horizon are you thinking on? Is this, I would assume, to be long-term? Because considering what we've seen on the export front, considering what we've seen in ISMs in the end demand markets, like in the Eurozone and the US, it appears to be a little bit dire. So if you're investing now, are you thinking, okay, this is going to pay off in 2025, 2026, instead of paying off by the middle of 2024?
Sure, I think that investors should have, they have different time horizons. And right now markets are moving in a very quick time horizon where you see the boom in AI stocks, we see the boom in Japanese equities. There is a lot of money sloshing around on the sides. Money is leaving cash, ETF funds, they're going into markets. So I think that investors are taking a much more risk-on approach, especially since the Fed is appearing to get to the end of their tightening cycle. Now, when it comes to the U.S., Europe, we take a less sanguine view, where those stocks, those asset classes have really moved. If we think about where there are pockets of opportunity, I think it really lies in the EM space.